If you like the following content, please leave a tip at buymeacoffee/Whitley.
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed. It's not safe out here. It's wondrous, with treasures to satiate desires both subtle and gross. But it's not for the timid. These words, attributed to the enigmatic Q, serve as a fitting introduction to our journey today. Welcome to Technology Investment Investigations, where we delve into the intricate world of technology companies, even when they're navigating challenging waters. Today we're exploring Tattooed Chef Inc., a company that's faced bankruptcy and now trades essentially as a penny stock. It was established in 2017. Tattooed Chef, under the leadership of CEO Sam Galletti, specialises in plant-based and frozen food products. The company has undergone Chapter 11 bankruptcy proceedings, a legal process allowing it to reorganise its financial affairs and operations. Despite the formidable challenge of financial catastrophe, we will assume for this video that Tattooed Chef's commitment is through innovation and quality. Now, leaving aside my reservations regarding plant-based foods that are supposed to be like synthetic meat, there has been a number of bubbles emerge over the past couple of years regarding this type of technology, similar to the kind of boom that you saw in the cannabis market, the boom that you see in the crypto market. There's been a boom in the plant-based foods market, all of which have been bubbles, and they've all more or less popped. Tattooed Chef is in the middle of that. But we're still going to go forward, and we're still going to try and explore what's gone on and what we can get out of it. Tattooed Chef operates in the ever-evolving market of plant-based and frozen foods. Despite the challenges of bankruptcy and Chapter 11 protection, the company strives to adapt to the striving consumer landscape. The global market for plant-based foods is projected to reach a staggering $74.2 billion by 2027, with an annual growth rate of approximately 11 to 12%. Now, Tattooed Chef is still working to tap into this growing trend with a wide range of plant-based offerings. Tattooed Chef's association with technology and innovation hasn't dimmed despite the challenges. They continue to employ advanced food manufacturing processes and emphasize the use of high-quality natural ingredients. The research and development department persists in creating exciting new products for the market, all of which are basically synthetic forms of meals that are already out there, which is basically where they're based around. So if we look at them closely, notably the utilization of advanced freezing technology, this is enduring, preserving flavour and nutritional value, which remains a competitive advantage in the frozen food market. This may well actually be the company's USP. So let's now conduct a SWOT analysis. That is the strength of the company, the weakness of the company, the opportunities the company has in a given market, and the threats that market will have towards the company. Recognising the unique position of Tattooed Chef as a penny stock recovering from bankruptcy and utilising their Chapter 11 protection, we'll cautiously go over what's in this company and what is potentially there for us. Despite the financial hurdles and the Chapter 11 proceedings, the commitment of the company and its innovation remains a shining light. They still have partnerships with major supermarkets across America, and there would be opportunities for growth in a perfect world. We do see their products on a lot of shelves. It is a recognised brand. The CEO running the company is a recognised celebrity in the United States, and I would expect this to add some value to the company, even if it is an esoteric value rather than an actual kind of tangible asset that we could add to it. Having said that, the journey through bankruptcy is going to be hard financially. My biggest problem with a lot of technology companies is you don't get dividends, and we're never going to get dividends from this in the short term. So, where is it weakest? Well, it's got a product which is fashionable, and as with all fashions, these are popping. The company itself is operating with a certain budget that hasn't necessarily met targets in the past few quarters. Certainly last year it was down significantly. Whether this was down to the market, whether it's down to competition, that's open for debate. It's not one we're going to have on this video, but be aware the bankruptcy proceedings are the big weakness going against this company, and at any moment, if you do hold shares in it, you could lose them instantly, as most markets, most financial markets that trade shares will not allow companies to operate beyond a certain point. When the share value drops below a certain point, when it doesn't meet certain criteria, and Tattooed Chef is certainly within that realm. So the opportunity is quite simple. As the world recovers from these financial catastrophes and all the wars that have been going on this decade, there is a possibility that anybody still trading can still make money and will still be able to sell their goods through it, whatever means they need to. So there is an opportunity for the company to rebuild and expand its product line. It could aim to capitalise on the growing trend towards healthy eating habits and plant-based foods. It could diversify and spread these out into companies like McDonald's, various fast food things. So I shouldn't really say McDonald's off the top of my head, but a number of these firms already do business with other plant-based companies which remain unnamed, but we've covered in past videos. So there are opportunities in the market. It's just whether they're going to be in a position to take advantage of that. And this is where it gets really difficult for Tattooed Chef, is that the market is saturated with competition. It faces the added threat of overcoming the bankruptcy stigma, as well as the usual regulatory changes and market uncertainties that we would expect to hinder the recovery. There are lots of other plant-based companies out there doing plant-based meats, plant-based foods, that are going to be a competition for this, and it doesn't take very much for a brand name to lose out. So in conclusion, Tattooed Chef is a bankrupt company that still is trading at a penny stock level. It's great short-term punts, not great for long-term value. The company itself, though, does have some significant assets. Its freezing technology is something that could be sold on and probably does have some significant intrinsic value, but that wouldn't be there for any shareholders. There is also the opportunity that the brand name is considered significant enough to be saved, and therefore the company would be allowed to just be refinanced and would carry on going forward. This is probably unlikely for a company of this size. It is only operating with a market value of less than 100 million. I'll put the main thing in the video itself, the actual kind of current value. It's up to you whether you want to look further into it, but it is a risk, it is a gamble, but it is one which I genuinely would look at in the short term. Tattooed Chef Inc. is now trading as a penny stock following bankruptcy and under the Chapter 11 protection. This presents a unique investment proposition. Its commitment to innovation and market positioning could aid the recovery efforts and make it a company worth considering. However, the journey ahead is still marked by challenges and uncertainties. As investors, diligence and cautious approach are essential when dealing with companies in such circumstances. Tattooed Chef's story is one of resilience, and whether it can gain its foothold remains to be seen.
Thank you for watching. Please like, subscribe and hit the notification bell. If you enjoyed my content, please support this channel by visiting buymeacoffee.com/Whitley or scan the QR code to leave a tip.